The city looks harmless from a distance. Rail bridges, church spires, tram bells. Basel, 1930. A town that pretends to be ordinary so power can walk around without a bodyguard. The doors open before sunrise. Coats shrugged off. Hats on pegs. A table polished to a black mirror. No microphones. No cameras. Only the sound of men who learned to make history without leaving fingerprints. They say it started with peace. But peace left a debt. After the First World burned itself out, the numbers didn't. Germany owed sums that couldn't be paid in a century. France wanted security. Britain wanted trade. America wanted calm markets. Everyone wanted something impossible. The solution wasn't a treaty. It was plumbing. A system of pipes running beneath the nations, moving value the way sewers move water. The press would talk about reconciliation and stability. The architects talked about flows. First came a plan to reschedule payments. Then another plan to rescue the first plan. Behind the paperwork was a single idea: privatize the problem. Shift the burden of sovereign rage from parliaments into a building that has no voters. Invent a bank that stands above borders and below daylight. So they chose a neutral stage and a neutral language. Switzerland, Basel, a little office that would soon become a state within a state. They called it the Bank for International Settlements. The statute read like a spell: immunity from search and seizure. Immunity from taxes and duties. Archives untouchable. Pouches inviolable. Staff protected as if they were ambassadors, though no ballot ever minted their status. A bank that law cannot reach is a bank that history cannot restrain. Its shareholders were central banks, not citizens. It would reconcile reparations, manage gold transfers, smooth currency shocks. That was the brochure. The reality was crisper: coordinate the price of time. Control interest, and you decide what nations can build and what they must abandon. The first chairman smiled like a funeral director. The first president spoke like a metronome. They didn't boast. They standardized. Telegrams turned to protocols. Private letters became rules of the road. Across Europe, vault doors answered to the same rhythm. Gold bricks stamped with eagles, lions, and laurels all obeyed a new authority stamped with nothing at all. You could measure the trust of a government not by votes counted, but by the weight of ingots that would cross the border at its request. The public never learned the room numbers. But merchants could feel the air change. A credit line opened in one capital, and wheat ships sailed on another coast. A rate raised by a quarter point, and factories in 3 languages turned their lights off a little earlier. And then, like a shadow sliding across a map, 1933 arrived. Symbols replaced laws. A nation put on a new uniform. Hjalmar Schacht could smile with his eyes and terrify with his silence. He had rebuilt German finance once before. He would do it again, this time under a banner that promised order and delivered annihilation. He took a seat in Basel as if it had been kept warm for him. The bank did not change its stationery. It did not salute. It did what banks do when politics take hostages. It insisted on procedure. There were obligations. There were remittances. There were accounts to settle. The fiction of neutrality is the most profitable fiction in the world. A small country to the east vanished in a week, Czechoslovakia. Its gold had been safe. Everyone said, because much of it sat under Threadneedle Street. But safes are obedient when instructions arrive with the correct letterhead. The request came from Basel, efficient and polite. The Bank of England transferred the metal to the Reichsbank's account. It was legal, they said. The point of systems is to let people do things without feeling them. In meetings under the eaves, the talk was technical. Clearing operations. Settlement chains. Foreign exchange exposure and seasonal flows. But the numbers kept resolving into trains, uniforms, and names spoken for the last time. London was bombed. Basel ordered payments. Paris fell. Basel balanced ledgers. Wars are fought in the open and settled in the quiet. The building developed its own weather. Corridors stayed cool even in August. The conference room smelled of paper, ink, and the ghost of someone's cigar. You can build a sanctuary out of rituals. Pour coffee at the same minute. Lock the same drawer with the same key. Tell yourself you are protecting the machinery that keeps bread in ovens and ships at sea. When the war turned, the vocabulary softened. Words like reconstruction and convertibility wore halos in memoranda. A new world had to be arranged, and the arrangement could not be an argument. Arguments belong to parliaments. Arrangements belong to rooms like this. The British had their central banker with the stare of a lighthouse. The Americans brought a Midwestern face that could sell savings bonds to a town on fire. The French carried grief in their briefcases. The Dutch counted with a precision that made the table itself straighter. Everyone had lost something. No one wanted to lose control. Across the Atlantic, a different gathering planned a public architecture, fixed exchange rates, institutions with visible names, a conference that looked like democracy holding a slide rule. Yet in the footnotes, there was always a clause. Basel would remain. A motion appeared to close it, to dissolve the bank that had stayed open when everything else closed. The arguments were clean. Moral hazard, complicity, the mixing of neutrality with convenience. But morality has terrible credit in an emergency. The motion wilted into a promise to review at a later date. The bank that should have died in the light survived by stepping further into the shadows. It redefined itself between sunset and the first train. What exactly does a bank for central banks do when the world is resetting its clocks? It builds standards the way an engineer builds a bridge. It writes circulars that become muscle memory. It hosts conversations no one else can convene because an invitation from Basel is a velvet summons. It perfects discretion until it is indistinguishable from absence. The gold kept moving. Not in convoys, not anymore. On paper first, then on cables, then on magnetic tape. 1,000 tons could cross an ocean in the width of a sentence. We talk about money as if it were a thing. But money is choreography. Someone calls the steps, and the dancers call it destiny. If you could listen, really listen, to the way interest rates talk to each other, you'd hear a language older than constitutions. One bank tightens, another loosens, a third pretends indifference while trading overnight. Signals travel from tower to tower faster than storms cross the channel. A mortgage officer in Milan doesn't know why the air changed. A factory owner in Birmingham feels a pressure he can't name. A farmer in Poland discovers that grain has a new price because someone adjusted the price of time. Basel learned to keep its sentences short. It publishes reports with the charisma of a courtroom stenographer. Footnotes that land like anvils. Recommendations that are not laws, guidelines that are not orders, frameworks that no one refuses. Through the 50s and 60s, everybody grew on the same fertilizer, credit. Productivity sang. Suburbs blossomed. Cargoes stacked like skylines on the decks of ships. But growth is a lens. It makes the hand moving behind the curtain look smaller than it is. The old gold link stretched and thinned. Dollars promised redemption, then promised trust, then promised nothing at all beyond the continued willingness of the world to believe. By the time metal was cut from the money's spine, the habit of obedience remained. Crisis would arrive. Phones would ring. Basel would convene. Central banks are sovereign only on paper. In practice, they are members of a quiet fraternity. Membership dues are paid in silence. Hospitality is offered in precision. You share your models. You confess your exposures. You receive understanding in the form of coordinated moves that look coincidental to anyone not in the room. It is not a conspiracy. It is worse. It is a culture. Cultures do not need orders. They need a place to meet and a story to tell themselves about why they are necessary. The story they prefer begins with stability. When prices are stable, families plan. When families can plan, politicians calm down. When politicians calm down, markets pick a direction. When markets pick a direction, ships keep moving, blades keep turning, night shifts remain employed. Stability feels like virtue because hunger is noisy, but stability at scale is a negotiated illusion. You decide which volatility is tolerable and whose volatility gets exported. You choose which currencies absorb the pain and which distribute it like a soft rain over a decade. You pick winners in the language of prevention. Every decade added another layer of circuitry. First paper, then wires, then networks of networks. Clearinghouses that clear the clearinghouses. Payment systems with names no citizen learns in school. Vaults that hold nothing you can touch and everything you can lose. By the time the century flipped, the bank looked different but felt the same. New glass. New servers. New badges clipped 2 suits that spoke English, German, French, and code. The oak table still shone like an untroubled lake. What does it teach, this building? That legitimacy can be manufactured like precision instruments. That sovereignty can be curated like a museum exhibit. That the tone of a paragraph can move more money than an army. You can call a currency strong and make it so. You can whisper that a currency is tired and watch it age overnight. You can declare that some balance sheets must expand and others must shrink, and millions of strangers will wake to new terms of existence without ever hearing your name. When people say markets are free, they mean free inside the rails. When they say democracies choose, they mean choices priced by the cost of borrowing. When they say history is made by great men, they haven't looked at a yield curve. There is an ethics to all this, but it hides like a seam in a well-made suit. A good tailor knows how to lay lines so that nothing puckers. Basel is a master tailor. Every crisis is a chance to refit the garment. Let out a little here, tighten there. Add a lining that no one asked for and no one can remove. The Second World War ended with photographs of signatures and flags. It also ended with spreadsheets. What to repay? What to forgive? What to transform into new instruments that will themselves need instruments? Debt became the raw material for the century. You mined it in one place and refined it in another. Capital flows were mapped like weather, and Basel became the barometer no one could admit to checking every morning. And yet, for all the discretion, the bank learned a hard truth: secrecy is brittle. When exposed to heat, it cracks. The form must evolve. So secrecy turned into complexity. Complexity looks honest because it is tiring. If no one can follow the diagram, no one can accuse the diagram of lying. By the early 2000s, the language of coordination had been upgraded to code. Risk was modeled. Liquidity was measured in finer and finer grains. You could slice a bank into promises and heat each slice separately without burning the loaf. Until one autumn, the oven broke. Phones rang. Flights landed. The old ritual resumed: coffee minutes, controlled panic. The cure was familiar: flood the pipes. Make time cheap. Make survival possible. Make tomorrow someone else's spreadsheet. The press called it a rescue. Inside the building, it had another name: preserving the chassis, because the chassis is what matters. The car model changes. The paint job updates. The engine is swapped. But the frame that holds the shocks, the mounts, the geometry leave that intact, and you can drive through another crisis without learning the wrong lessons, and Basel is nothing if not a memory. It remembers how politics ruin neat systems. It remembers how morality seizes moving parts. It remembers that stability is not the absence of risk, but the smooth distribution of consequences. So the building planted a new seed. If money is information, store it where information lives. If control is about timing, design money that keeps perfect time. If oversight is an art, automate it. They gave the seed a friendly name: innovation. It sounds like light through clean glass. It sounds like the future walking in with good posture. They began to test the future in public, which is to say in private, with press releases. Digital cash issued by central banks. Programmable units that behave the way the system prefers. A ledger that doesn't forget. A wallet that understands instructions better than its owner. It is a natural extension, they say. Credit cards already know you. Phones already follow you. Apps already catalog every habit that makes you economically interesting. This is just better plumbing. Fewer leaks. Faster pressure relief. Cleaner taps. But plumbing can do more than deliver water. It can ration it. It can't tint it. It can decide whose faucet opens in a drought and whose handle spins freely without a drop. The first part of the century taught them that moving trillions is easy. The hard part is moving behavior. With digital cash, the two become the same task. The experiments have poetic names and tidy PDFs. They read like recipes: interoperability, cross-border settlement, privacy by design, which is privacy in quotation marks. It looks solid. It tastes neutral. It digests into something indistinguishable from policy. If you want to see the outline of it, blur your eyes. A platform for platforms. Local flavors on a shared spine. Central banks retain their flags on the screen. But the software kernel hums the same melody in every language. What will it mean to live inside a world where money is a conversation between your actions and an algorithm? What will it mean to be correct enough to buy a train ticket? What will it mean to disagree and find that your disagreement lowers your daily limit? They won't announce it like that. They will say resilience. They will say inclusion. They will say safety. Words that no decent person resists, the same way no decent person argues against clean water, and the building will remain quiet. Quiet is the brand. Quiet is the warranty. Quiet is the way you persuade a century to forget that once, long ago, someone built a bank that could not be searched by police. If you stand outside at midnight, you can hear the servers think. A steady vibration through the granite. In the morning, the trams will pass and the feeling will dissolve into normality. Lunches, meetings, tourists wondering why this address gets no postcards, but the clocks inside keep the old rhythm. Meetings every other month, rain or shine. A slow, exact heartbeat that tamps down the world's noise to an acceptable hum. The governors arrive with the kind of luggage that never gets lost. They leave with a consensus that looks accidental. People imagine power as a person giving orders. Here, power is a diagram that nobody wants to redraw. It is a habit so refined that breaking it feels like sacrilege. It is a set of numbers that all point a degree to the left at the same moment. And suddenly ships in three oceans are steered a little away from a reef they never knew they were near. This is where your day meets their design. When the rent renews, when the credit line adjusts, when a job opens or closes because the cost of tomorrow shifted by the thickness of a hair, and still outside, Basel looks harmless. Rail bridges, church spires, tram bells. A city that has learned to wear modesty like armor. The story continues from here without changing tone, only altitude. The past remains present. The present is an apprenticeship for a future being coded in the same cool rooms where ink once dried on rationed paper. What began as plumbing for reparations has become an operating system for obedience. The next part is simple and difficult at once, where the public institutions gather under bright lights and the private circuitry adjusts the brightness, where currencies shed their skin and keep their teeth, where control stops pretending to be a byproduct and introduces itself as a feature. The door is still open. The table is still polished. The numbers are still walking toward you. Listen closely. You can hear them arrive. Watch the way a rule becomes a habit. Summer, 1974. Cologne sun, ordinary afternoon. A small German bank fails between lunch and close. Wire payments sent out. Incoming dollars missing. Across the Atlantic, counterparties wait for funds that will never arrive. Settlements freeze at the worst possible second. Traders give the failure a name Herstatt. Basel gives it a committee. They gather governors and supervisors and build a new priesthood, the Basel Committee on Banking Supervision. Not a parliament. Not a court. A table that writes minimums which behave like commandments. Capital must be held. Risk must be weighed. The floor of safety must be high enough that the roof of panic doesn't cave in. In 1988, the first catechism, Basel I banks learn a new arithmetic risk-weighted assets. Not all loans are equal. A government bond is a feather. A mortgage is a stone. A corporate loan might be a brick wrapped in velvet. Hold capital against the weight, or don't call yourself a bank. The rules look technical. They create incentives. Incentives become architecture. Balance sheets stilt toward what the rules bless and away from what they burden. Shadow banking fattens in the corners the light doesn't reach. Then comes the promise of precision. Basel II. If risk is a science, let models speak. VAR curves, correlations, Gaussian serenity. The map looks so exact you forget it isn't the terrain. Meanwhile, the pipes are modernized. Payment systems stop being the post office and become nerves. Fedwire hums. CHAP snaps. Target and then target to knit Europe's arteries together. A new remedy for Herstatt arrives with a handsome acronym, CLS Continuous Linked Settlement, so the sun can set without stealing anyone's dollar. The choreography tightens. The tempo rises. Markets globalize. Finance stretches like a taut wire from Hong Kong dawn to New York midnight. Spreads thin to paper. Leverage fattens to silence. Then a handful of bad bets stop being handful. Autumn 2008. A bank older than many countries buckles under mathematics. It's war it understood. The model collapses into a margin call. Fear becomes a currency with infinite demand and finite supply. Phones ring again. Basel widens the table. Swap lines bloom like emergency bridges between central banks. The Federal Reserve becomes the world's dollar hose. Sheets expand. Collateral grows a social life. Words like facility and program replace prayers. Then the counter-catechism, Basel III, more capital. Higher quality. Buffers for stress, a surcharge for being too big to say goodbye. Liquidity coverage to survive a storm. A net stable funding ratio to remember winter exists. A leverage ratio that ignores the siren songs of models and counts everything the same, just in case. These are not laws, but watch them move parliaments. If a supervisor says a bank needs a thicker coat, legislators hurriedly knit. National pride bows to international thresholds because a downgrade travels faster than a speech. Around the tower, new acronyms take rooms. Spimi watches the rails. Yez counts the insurers. Iadi studies what happens when the music stops and depositors rush the door. The Financial Stability Board moves in with a suitcase and becomes the Condo Association for Systemic Risk. One address, many doormen. The building is now a campus with a single brain. You can learn a lot about sovereignty by studying exemptions. The bank's bags are not to be opened. Its archives are not to be seized. Its corridors are territories of their own, a microstate woven into another with the consent of everyone who needs it to exist. When power becomes indispensable, it becomes untouchable, yet the building is not a villain in its own story. Ask the men and women with the keycards. They will talk about resilience, about protecting the payments that keep blood in the body politic. They will show you graphs of crises averted and scars from the ones that weren't. They will not use the word control. They will use the word continuity, but continuity has a price, the memory of who pays. In sovereign debt crises, private sector involvement becomes a euphemism for haircut. In banking crises, taxpayers learn the shape of contingent liabilities the hard way. The safety net is public. The Trapeze Act is private. Basel redesigns the net after each fall. The circus returns to town. Europe stitches a currency without a country. Target 2 balances swell like tides. Surplus and deficit lock eyes across a continent and pretend it isn't personal. The logic is elegant. The politics are volcanic. Basel does not set fiscal policy. It sets the floor underneath it and the ceiling above it, then lets elected people fight inside the room it has sized. Outside, money mutates. Code writes assets out of thin air. Exchanges masquerade as protocols. Leverage hides in smart contracts until someone turns a key and the chain of dominoes becomes a straight line to zero. Central bankers speak a new dialect, on-chain, off-chain, tokenized, collateralized oracles and bridges. The institution that learned from gold to paper 2 wires learns again. Do not try to ban the storm. Measure it. Channel it. Offer a safer harbor at a price. 3 things define the next chapter: speed, programmability, and identity. Speed breaks the old excuses for slow policy. Programmability changes money from a passive medium to an active instrument. Identity fuses your economic life with your civic one. Pilot projects bloom with names that feel like postcards. In Zurich, wholesale settlement with tokenized securities glides between a central bank ledger and a private exchange as if it were always supposed to. Across a border, a French experiment threads wholesale euros through the same needles. In London, APIs sketch a retail model where the central bank is the vault and the private sector is the storefront and your wallet is a compliant citizen. North of the Alps, an icebreaker imagines cross-border retail CBD flows hopping between domestic hubs through a neutral switch. In Asia and the Gulf, a bridge project tests multi-currency corridors for trade settlement, a customs union for value where the customs are coded. Each pilot repeats the same reassurance: 2-tier. We won't replace banks. We will make them better at being instruments of policy. Privacy will be preserved, but not from the things that matter. Offline will be possible, unless it isn't. Limits will be for your safety. Expiration will be for stimulus. Rules will be for resilience. Underneath the demos is a design. A unified ledger, shared rails for public and private money-like things. Not one database to rule them all, but one grammar to make them rhyme. If tokens are citizens of a city, the city plans the roads, the zoning, the curfews. Consider what programmability actually means in a bad week. A region floods, payments to merchants in affected postcodes settle instantly, fees waived by default. A pandemic returns, payroll wallets stop up every Friday at 9, spending limited to essentials by design. A protest grows, travel allowances shrink quietly, ticket purchases decline without explanation, a handful of accounts time out until Monday. No jackboots. Just parameters, defenders will say. We already have parameters. Compliance exists. Sanctions exist. KYC and AML already act as gates. True, but gates built into the rails feel different than gates at the station. When the rule lives in the money, the exception must beg for life. You will hear about zero-knowledge proofs and privacy sets and claims without disclosure. You will see white papers where identity is both present and absent, where audits happen without revealing you. Some of it is sincere. Some of it is perfume. All of it pushes humanity toward a line we haven't seen before, where dissent has a credit limit. The counter-argument is as old as the temple granary. Systems prevent famine. Order is mercy at scale. Fraudsters thrive in chaos. Tyrants thrive in opacity. The cure is to harden the core and watch the periphery more closely. Basel was built to do exactly that. So we arrive at the paradox the building has always embodied. The same discretion that saves you in a panic can erase you in a policy. The same coordination that prevents collapse can prevent consent. The same neutrality that roots gold to its legal owner can root your options to their lawful minimum. History does not repeat, but it calibrates. The gold clause is gone. The habit remains. The immunities persist. The explanations improve. We've moved from ledgers written in ink to ledgers that write back. What can a citizen do with a machine like this? First, learn its vocabulary. Capital buffers are not abstractions. They are the length of your layoff or its absence. Liquidity facilities are not acronyms. They are the difference between a small business closing this winter or next. Payment trails are not plumbing. They are the lanes where rights become customs and customs become rules. Second, watch the moments when emergencies are defined. Definitions are policy. A crisis-labeled market functioning earns one set of tools. A crisis-labeled household distress earns another. The labeler lives in Basel as often as it lives in your capital. Third, remember the lesson of 1930 disguised as modernity. When you remove money from politics, you do not remove politics. You remove witnesses. Central banks deserve insulation from tantrums. They do not deserve invisibility from consequences. A society that delegates its money to monks must ask what god the monastery serves. Inside the tower, clocks still agree with each other. Every 60 days, the rhythm returns, arrivals, conclave, with edges sanded down to neutrality. And yet the edges cut. A quarter point here strangles a million marginal plans. A liquidity window there births 1,000 reckless ones. Invisible hands are attached to visible wrists if you know where to look. The defenders of the order will tell you the alternative is worse. They have evidence. Hyperinflation is a museum of human panic. Currency collapse is a famine that starts with numbers and ends with bones. They are not wrong. But stability without consent is only a slower kind of violence. Here is the truth beneath the marble. The system is not omnipotent. It is a machine that requires belief. Belief that tomorrow's dollar is useful. Belief that the rules will be enforced and sometimes merciful. Belief that the quiet place in Basel protects the plumbing for everyone, not just the penthouse suites. Belief is a public good pretending to be a technical setting. It can be squandered. It can be earned. It is earned when transparency is not theater, when accountability is not a press release, when pilots include breaks the public can see. The next crisis will arrive on schedule in the sense that crises always do. It will have a new accent and familiar eyes. Derivatives will wear a different coat. Debt will swear it's healthier this time. Politicians will demand the impossible by next Tuesday. Basel will pour coffee. The governors will count and decide and emerge with a sentence that sounds like weather. Conditions warrant appropriate measures, and you will feel it. A few days later, as a rate on a loan you haven't asked for yet. As a job that reappears in 6 months, on different terms. As a payment that clears in 3 seconds instead of 3 days, and then refuses at the speed of light when the rules decide you are not the right kind of citizen for that purchase at that hour. This is not prophecy. It is a continuation. From reparations plumbing to swap lines to programmable allowances, the arc is smooth because smoothing arcs is the institution's craft. Power rarely announces its destination. It improves the road until arriving feels like gravity. The camera returns to the city that insists on being ordinary. Rail bridges, church spires, tram bells, a tower with windows like a metronome. Inside, a room that has learned to price centuries, the meeting adjourns. The minutes will be published. They will say nothing inflammatory, nothing untrue, nothing complete. People will skim headlines. Markets will inhale. Another quarter will begin its slow, precise swing. History doesn't repeat. It compounds. And money is always at the center.